Hi everyone, and welcome back to Money and Medicine, where financial wellness meets real life. In today's episode, I'm going to explain what income protection actually covers, why disability cover is completely different, and why severe illness cover serves another unique purpose. And finally, how financial planners calculate how much lump sum cover you actually need. By the end of today's episode, you'll understand why these products are designed to work together and not replace one another. Let's start with a simple question. What exactly are we trying to insure? Insurance only exists because something can happen that causes financial loss. Think about your future as a doctor. Your biggest asset isn't your car. It isn't your house. It even isn't any of your investment. Your biggest asset is your ability to wake up every morning and earn an income. That income is what pays for everything else in your life. The challenge is that different medical events create different financial problems. One insurance product simply cannot solve every single problem. Let's imagine you're a 25-year-old doctor earning 50,000 Rand per month after tax. You develop severe depression, or even perhaps you injure your back and cannot stand in theatre. Maybe you develop multiple sclerosis and cannot continue practicing. You are still alive. You still have a family. Your property still needs to be paid. If you have children, you still need to pay their school fees. The problem is that your salary stops if you can't perform your usual occupational duties. This is exactly what income protection is designed to solve. Income protection replaces part of your monthly income in the event of sickness or disability that prevents you from performing those usual occupational duties. It is important to understand that income protection doesn't give you millions upfront. It pays your monthly income, just like a salary. Think of it as replacing your paycheck. Income protection thus protects your lifestyle and it protects your monthly cash flow to ensure that you can maintain your standard of living. But here is the problem. Imagine your spinal injury requires extensive home renovations. You now need a wheelchair access, you need ramps, a stair lift, you even need to modify your bathroom, or in certain cases you might need a specialized vehicle. Your income protection policy doesn't suddenly pay you 2 million Rand of these expenses. It simply replaces your monthly salary. That's where disability cover comes in. Disability cover pays one large tax-free lump sum amount if you suffer a qualifying permanent disability. Instead of replacing income, it provides capital. Capital to solve expensive once-off financial problems. Now, like I mentioned earlier, these examples could include purchasing specialized medical equipment, converting your home, buying an adapted vehicle, paying off your property. In certain cases, you can reduce your debt, you could fund future medical costs, and you can create an investment to potentially supplement your future income. Now, the best way to think of this is your income protection will pay your salary, and disability cover gives you the financial means to pay for these unforeseen expenses. These products clearly complement each other. They do not compete with each other. Now, let's look at a completely different situation. Imagine you are diagnosed with cancer, or someone you know has been diagnosed with cancer. You continue working, you are still earning a salary, you aren't disabled. So income protection may, in certain instances, only pay a portion of your income while you are booked off from work when you receive treatment. But what are the financial consequences of being diagnosed with cancer? You may need to have treatment overseas. You may consult specialists that is not covered by your medical aid. You may even require experimental medication, or your travel expenses might increase if you need to travel to a specific hospital in a different region. The financial impact can easily reach hundreds of thousands or even millions of rands. And this is where severe illness cover comes in. It pays a lump sum amount when you are diagnosed with a specified severe illness, regardless of whether you are still earning an income. That's incredibly important. You don't necessarily have to be disabled. You simply need to meet the policy definition of a qualifying severe illness. So severe illness cover protects your balance sheet. Income protection protects your monthly income. Now the big question is, how do we calculate how much lump sum disability and severe illness cover you actually need? And how do we calculate your income protection? Let me start with income protection. Income protection is straightforward. If you are earning 50,000 Rand per month after tax, you can only protect your income for that 50,000 Rand per month. You can't protect your income for more than a 50 because your current ability to earn an income is based on your actual earnings, which is the 50,000 Rand. Lump sum disability cover is completely different. Like I mentioned earlier, it's a once-off tax-free lump sum amount that will pay out to you in the event that you suffer a permanent disability. In this case, we normally work on a multiple of 2 to 3 times your annual salary. And the purpose of this is to give you the funding to pay for those unforeseen medical expenses and lifestyle adjustments. The reason why we use a multiple of your annual salary is because people live within the means. If you are currently earning 50,000 Rand a month, you are maintaining a certain lifestyle, you're staying in a certain property, and you're driving a certain vehicle. A multiple of your annual salary would be more than adequate to cover those unforeseen expenses and lifestyle adjustments associated with the stage of your life that you are currently in. Severe illness cover is slightly different. In the event of a severe illness, we will always consider whether you've got a medical aid or a hospital plan. And if you've got a medical aid and a hospital plan, how comprehensive is that medical aid and hospital plan? Because the reality is, medical aids and hospital plans do not cover all of the cost that is associated with a severe illness, such as cancer. There will always be a sub-limit associated with such a condition on your medical scheme. For an example, roughly in the region, depending on what medical scheme you've got, it might be something like 250,000 Rand per annum that the medical scheme would pay for cost associated with cancer, by way of an example. So the financial advisor would sit down with you and you actually need to go into detail to look at what is covered by your medical scheme and what potential shortfalls might exist. So based on the shortfalls that might exist, we would recommend an amount. And as a young medical professional, from our experience, that will always be in the region of between 500 to 750,000 Rand as a figure. But in certain instances, it can be more depending on your specific needs. What we need to understand is that income protection cover, disability cover, and severe illness cover is 3 benefits that complements your entire portfolio. It's not benefits that are used to replace each other. They are used in conjunction to give you a really solid protection plan. The first phase is having an income protection policy because you need to cover your earning ability. Your biggest asset is your earning ability. The second phase is disability cover, and then the third phase is severe illness cover. So as a final thought, as doctors, you'll spend your career protecting other people's health, but don't neglect protecting your own financial future. Your medical degree is one of the most valuable income-producing assets you'll ever own. Protecting that earning ability is one of the smartest financial decisions you'll make. If today's episode helped you understand the difference between these products, please share it with your classmates and colleagues. And if you'd like one of our affiliated advisors to calculate exactly how much income protection, disability cover, and severe illness cover you actually need, we'd love to help. Thanks for listening to this episode, and until next time, land a plan.